Welcome, my name's Jeff Driver, General Manager Business Development for Djerriwarrh Investments Limited. I have with me today Mark Freeman, who's the CEO, and Brett McNeill, who's a Portfolio Manager for Djerriwarrh Investments. Welcome. Mark, we've just released the full year result for the financial year 2023. We saw an increase in underlying profit, up 2.9%, that excludes the merger dividend from BHP Petroleum Woodside last year. I guess the key feature of the result was the increase in dividends that we received and also the improvement in option income that we received through the year. Do you want to comment on the improvement in dividends that we received?
Sure, well, we had some good increases from stocks like Woodside and Transurban, also Region Group, JB Hi-Fi provided some improvements. And then our broader bank exposure, there's some nice increases there, and Djerri has a good exposure to the Australian banks. Great source of franked dividends, and Macquarie Group too, which has been a large part of the portfolio. We had an increase as well.
Yeah, and I guess the resources company shows some decline.
Yeah, well, I think in resources they're going to be very cyclical, and we've had some a good period of great dividends, and the balance sheets are really strong. And when you look at the majors like BHP and Rio, where we really pick up our exposure, but they'll move with the iron ore price, and they were down a bit. And also one of our holdings, James Hardie, decided to cut their dividend. They're essentially a US-based company. They're not really producing the franking credits. So they've actually switched to doing buybacks rather than paying dividends. I think we've probably got a bias towards dividends still a bit, but they've decided to change their policy in that regard.
And also, very importantly for shareholders, we increased the final dividend to 7.75 cents per share, which maintained also the enhanced yield that we have over the ASX 200. Do you want to comment on that?
Yeah, well, look, we think about Djerri in sort of the two lenses around income. We want to pay an enhanced yield to shareholders. We're targeting sort of 1 to 1.5% above the index when you gross up for franking credits, and pleasingly, we're hitting those targets. And then we're looking for a total return that gives something around market. But when markets are really strong, we won't quite get that performance because the options do cap our upside. And what we think we certainly produced a total return that's well in line with our expectations.
Thanks. So Brett, I mentioned the improved option income for the year, which was very pleasing. Do you want to comment on how you look to manage the portfolio and the options positions, and really how the improved income come about?
Sure, thanks Jeff. Well, the option strategy that we run is a key part of our enhanced yield strategy. So as a reminder, we write single stock call and put options against selected holdings in the portfolio, and we manage it on a daily basis, which is a key to generating the additional income that we need to deliver our enhanced yield for Djerriwarrh. So during the year, it was another good period for Djerriwarrh for option income. We positioned the call option side of the portfolio quite well. We started the financial year with lower than average call option coverage against the portfolio. This turned out to be a good position because the market subsequently rose in July of last year, and that benefited the portfolio. And then we finished the year with call option coverage at about 32%. So good level of coverage and positioning against where we see value in the market. And on the put option side, we were quite active as well. So we wrote a number of put options in September, which turned out to be good timing because the market subsequently rose strongly and we were able to bank a significant amount of income early. And then we were also very active in writing put options in March and April of 2023 in response to the sell-off in financial stocks as a result of the US regional bank crisis. So again, the timing of that turned out to be quite good. Share prices recovered and we're able to lock in a reasonable amount of income, which was good.
Mark mentioned earlier on about the other part of the performance we're looking to achieve is good portfolio return. Do you want to comment on the 12-month performance of the portfolio and how that was achieved?
Sure. We think overall it was a reasonable year for Djerriwarrh in terms of the total return, with a reminder that our focus on income and delivering an enhanced yield will tend to produce a bit more short-term income, which can occur at the expense of potential capital growth. So we need to balance the two. And overall, I think it was a decent result for the year. The portfolio's total return, including franking, was 14.2% for the financial year, and this compared to the market at 16.6%. including franking. So overall, a reasonable return from a total return perspective as well.
And I guess in terms of the adjustments you made to the portfolio through the year, I mean, there's obviously some stock is sold because of the exercise of call options. What were the sort of key changes you made to the portfolio through the year?
Yeah, the active management and the use of options means that there'll always be a lot of portfolio activity during the year. So some of the key purchases that we'd mention would be BHP was our largest overall purchase for the year, and this was done to increase our holding in the stock based on our view of that company at good prices, but also to replace a lot of stock that was sold as a result of the option exercises. Our largest net purchase was actually NAB, where we saw really good value post their profit result earlier this year. A dividend yield of 6.5% before franking, so grossed up you're getting towards 9%, we think is a compelling value equation when the fundamentals are solid, and we took advantage of that in a stock that we'd been patient in waiting for the right opportunity, so we bought a lot of NAB stock during the year. In terms of new purchases, we added 2 stocks to the portfolio this year, being Port of Tauranga and Macquarie Technology Group, both of which we think are good long-term additions for the portfolio. And then on the selling side, we exited our positions in IAG, Iris, Invocare and Atlas Arteria, all a result of option exercises as well as active selling. And we just saw more compelling opportunities in the market, particularly from that income and growth perspective than leaving money in those companies.
Mark and Brett, any comments about the market in general and what it means for the Djerriwarrh over the next 12 months?
Yeah, we're probably a bit more cautious on the market as it is at the moment. We've still got the interest rate increases really playing out through the economy. It's probably been a bit slower than what the market was thinking. Everyone was pretty cautious, 6 to 12 months ago when interest rates started rising. Companies overall have been producing okay results. I mean, clearly there are pockets of weakness going through the economy, but overall, I think the economy's held up better than what people expected. But we're still thinking there's perhaps a bit of a slow grind going through the economy where the impacts of inflation, higher interest rates will start to drag down the economy. So in that regard, it's just about being a patient investor. There is always opportunities in any one year. And we look back over the last 12 months, there's been opportunities. And I think the way Djerriwarrh invests, it is to really capture those opportunities. So I think we're waiting for opportunities to come to us rather than us sort of chasing opportunities. And we think they'll be there going forward. So we're not saying the market's overvalued as such, but we just think there's a bit of cautiousness around where we're seeing markets at the moment.
And Brett, you got anything to add to Mark's comments?
Yeah, we never know exactly where markets are going to go, but the positioning of the portfolio gives us a lot of confidence at the moment. The adjustments that we made during the last financial year, we think set the portfolio up well, particularly for dividend income, and that's especially with reference to the large buying we did in NAB, as well as other financial companies like Westpac and Macquarie Group. And the options book is well placed. We've got good call option coverage, starting the year at about 32%, some put option positions, and overall the profile of the options book looks quite good at the moment in terms of the profile of the income and the positioning versus market prices. So we think overall the option book is positioned well as we start the financial year.
And I think, when you think about more uncertain times, we think building on that level of confidence, we look through the portfolio and we need to be able to say, are we invested in good companies? And we think about the quality of the franchise, the quality of the assets, the people running it, the strength of the balance sheet. And that's where we get great comfort. Djerri's in good companies and we see a good starting year or starting position for the year in terms of the income we're going to generate. So just support Brett's view. We feel very comfortable with the way the portfolio is positioned.
Okay, thanks Mark and thanks Brett for your time this morning. Thank you.